What's up, guys? Raymond here with episode 16 of our financial statement analysis for the German industrials stock list. And without further ado, we're going to jump into our key ratios first, as we always do. And we're going to be analyzing a stock called Indus Holdings. If you're new to my financial statement analysis videos, what we do in these videos are we analyze the top 3 financial statements relevant to a company, those being the income statement, the balance sheet, and the cash flow statement. And we look at the key factors that comprise these 3 statements, and we attempt to come up with an overall idea of how strong the company is at the current period, up to this date, and how it's and considering how it's done in the past. And we attempt to project how well the company will do in the future. So without further ado, let's get into the key ratios. So the market is closed right now, so you're not going to see live prices. But this is roughly what the company is going to be looking at when the market opens. So the market cap, which is the overall price of the company, according to the public market, what the public market views the company's value as, is 636 million euros. PE ratio, price to earnings ratio, is 12.53. Revenue, which is overall sales in the last financial year, was 1.74 billion euros. Dividend yield 4.4%. Earnings per share 1.89 euros, which is pretty. Let me just check compared to its stock price. So if you compare earnings per share of 1.89 divided by 23.27, you get a decent amount. It's like I would say about 10%, just under 10%. So a decent earnings for the last financial year. Beta level is 34% above the market average, but you can expect that in this economic climate. So the income statement we're going to check now. As you can see already, the assets, being a dark purple figure, isn't too high. It is consistently positive. Well, actually, it's not. The 2020 financial year, it lost a little bit of cash. It didn't do too well. It was in negative earnings territory. The 2019 financial year done pretty well with regards to revenue, and it done okay with regards to profit margin. The 2021 financial year, which was the last financial year, it done a little bit better than 2020 financial year, but worse than the 2019 financial year, and it also made less profit. So it didn't do it definitely. I believe the company definitely needs to be more consistent, and also need to find different ways of generating income, as well as reducing expenses to be able to maximize the profit margin. The balance sheet shows the liabilities and assets of what the company so relevant to a company. And in this case, the light purple figure is the assets, and the dark purple figure is the liabilities. So the liabilities are about 50% of the asset figure, which is definitely good. I always say 50% leverage is probably the highest amount of leverage that a company should take on, just so they can make sure that the interest payments payable are not necessarily interfering with the earnings for shareholders. So let's get into the cash flow statement, which is the last of the financial statements, and see what's going on there. So the starting line, which is the net income line, was 47.56 million euros in the 2021 financial year. The cash flow from operating activities was 116 million euros. The investment activities was 130 million euros. And lastly, the cash flow from financing activities was not negative 44 million euros. Let's see how it was spent. So dividends paid 21 million euros. Retirement of stock was 84.67 million euros, and the retirement of debt was 106.69. So overall, the company is doing a good job with regards to reducing debt. I definitely think that, as I stated earlier, they can do a better job of increasing profit margins over the next few years, and hopefully those goals come to fruition relatively soon. But without further ado, I'm going to close this video. I hope you guys enjoyed it. I will see you in the next one.